happy to introduce our next speaker here for Leading Entrepreneurs of the World Conference. This is Thomas Moser. Thomas is an alternate member of the governing board of the Swiss National Bank. And Thomas is going to speak to us this afternoon about central bank digital currencies. So I'm sure that's going to be a fascinating conversation. And Thomas, let me hand it off to you and with a warm welcome.
Thank you very much, Glenn. Welcome everyone from Zurich, Switzerland. I actually want to start by saying from the sunny Zurich, Switzerland, because I just had the sun shining into my face until a few minutes ago, and now some clouds are gathering, and I hope that doesn't mean anything for the topic CBDC I'm going to talk about. Perfect. So I'm going to talk about central bank digital currencies. And let me start with talking about central banks and central bank money. Sometimes when you hear people talk about cryptocurrencies or stable coins, a lot of times people say, well, this is privately issued money, that's something new. Now, cryptocurrency stable coins are something new, but privately issued money is not. That already exists. If you look at the type of money that you have and that you use to make your payments with, you basically have two forms of money. One here on the left in blue are the banknotes, which are issued by the central banks, which is state-issued money. And then you have on the lower right commercial bank deposits, which most of the times are used when you make payments. And these are a privately issued form of money. It's issued by commercial banks. Now, the commercial banks themselves, they have, again, accounts with the central banks. That's something that a private citizen cannot have. So it's the banks that have an account with the central bank. They use it to settle their payments among themselves. But basically, these two blue squares here are what central bank money is. So central banks issue banknotes, which are used by the public, and they issue, if you want, bank accounts or deposits to commercial banks and some other financial sector participants, but not to the public. And the public then uses in digital form the money that is issued by the commercial banks, again, in form of bank deposits. Now, when we talk about central bank digital currency, we can mean two things. The central bank could, on the one hand, just tokenize the central bank deposits for the commercial banks. And that's when central banks talk about the so-called wholesale CBDC. That would be a CBDC just available to the commercial bank. And what you basically would do is that the platforms that are used nowadays for the commercial banks to settle their payments, just to replace that with some sort of a DLT infrastructure. And then the central bank, instead of issuing deposits, would issue wholesale CBDC. A lot of central banks have been experimenting with this type of CBDC. One of the first ones were the Bank of Canada, the monetary authorities of Singapore, many others, the Swiss National Bank as well. Our experiment has been called Project Helvetia, so they have different names. Bank of Canada called it Project Jasper, Project Ubin in the case of the MAS. And all these experiments showed basically that this is possible to do. It's relatively easy to do, but it's not so clear whether it really has an advantage over the platforms that are currently used, the so-called real-time gross settlement systems that are in place now for these types of payments. Now, the other type of a CBDC would be, of course, if the central bank would say, let's tokenize or let's digitize banknotes. And that would be what central banks call a retail CBDC. That would be a CBDC available to the public at large. Now, that, as you can imagine, would be a much bigger step, because right now there's a clear division of labor between commercial banks and central banks. Central banks issue the physical type of money, banknotes, coins, and the commercial banks issue the digital type of money. So one question, of course, that immediately comes up: what happens to commercial bank deposits if now central banks start issuing a digital form of money? Now, of course, what's also happening is that blockchains, DLT are becoming more popular. So the question is, what type of money do you put on these blockchains? And that's where stablecoins come in. We have several examples. So there are different types of stablecoins, but one popular form is that an issuer of a stablecoin basically has a commercial bank account and uses that to back its stablecoin. Tether is the most popular type. There are others, but that's one way to issue a stablecoin. That the difference here is that that would not be normally not a commercial bank that does it. It's another issuer. And the question, of course, there is about regulation. What type of regulation do you need for an issuer of a stablecoin? But basically, they just extend that business model where you take a deposit and then issue from that deposit something else. In this case, it's just a stablecoin issued from a commercial bank deposit. Of course, you could also, if you have access to central bank deposits, directly use the central bank deposit to back your stablecoin. That's of course only possible for licensed banks, but that's happening in Switzerland. We have since more than a year a bank that has done that, that uses its central bank deposits with the Swiss National Bank to back its stablecoin. That the advantage that you get is, as an issuer of the stablecoin, of course, you reduce one type of counterparty risk. You have the central bank deposit directly backing your stablecoin. Now, stablecoins are, of course, very much in demand. You see here the growth of stablecoins. Most of it has been Tether, the most popular, but there are other stablecoins. And the reason here is that if you use a DLT or a blockchain, you need some kind of a means of payment. We all know that Bitcoin, Ether, and these non-stable coins, they are very volatile in their price. So they are mainly used as a speculative investment, but not really as a means of payment. And that's where stable coins come in, that you want to have something to pay with, some form of money on the blockchain, on the distributed ledger that has a stable type of value. And of course, that's also where central bank digital currencies would come in. I think that would be one clear use case. There is obviously a demand for stable money on blockchains, on distributed ledgers, which is now satisfied with stable coins. And the question here too would be, what happens to stable coins? Of course, if CBDCs come, the same question a little bit that commercial banks have. What happens to commercial bank deposits when central banks start issuing a digital form of money for the public at large? Now, central banks, if you look at what they have been saying, then this is, I think, an interesting chart from the Bank for International Settlement. And what they did here is they looked at speeches given by central banks. Now, speeches so that's the number of speeches in one of these bars. So the red shows you speeches that talk negative about CBDCs. Blue shows you a positive attitude in the speech towards CBDC. And then you also see these dark blue and bright blue, dark red, bright red about retail CBDC, the dark colors, and wholesale CBDC, the lighter colors. And you see that wholesale CBDCs have never been that controversial among central banks. I showed you before also why the change wouldn't really be that big. But if we start issuing retail CBDC, a lot of questions arise for the ecosystem in general, but also for central banks. So they have been mainly negative on retail CBDC, but that started to change in 2019. The dark black line here shows you basically the net result, and you see that towards the end of 2019, speeches on average suddenly started to become more positive and on average positive towards CBDC. And I think it's fair to say that over the last, especially 2 years, central banks have clearly increased their work and research on central bank digital currency. Now, I think it's an open secret that one of the reasons was that one of the big techs, Facebook, came with a proposal to issue its own stablecoin. And there is also a little bit that competition and question, what happens to the payment system, to the national payment system, if one of the big techs comes in and provides its own possibly global stablecoin. I think that was clearly also an encouragement to central banks to accelerate their research on central bank CBDCs. Now, let me quickly say something about wholesale CBDC. As I mentioned, several central banks looked at that. The Swiss National Bank had its own project, Helvetia. What is a little bit different in the project that we had at the Swiss National Bank compared to the projects by other central banks is that ours was not really caused by research. So most other central bankers started it as a research project. It also was executed as a research project. In the case of Switzerland, it was really driven by the private sector. And the situation is the following. The Swiss Stock Exchange announced already now, I think 3 or 4 years ago, that they want to start a digital exchange, SDX, and that's based on a distributed ledger. So here you see on the left, you see the Swiss value chain currently in place at the Swiss Stock Exchange. You see that you have 2 banks, for instance, they trade or some assets. Then you see the trading is taking place on top on one of the platforms, on the Swiss Exchange platform. Then you see the clearing taking place on 6xClear. And then you see the settlement taking place separately for the cash and for the security, again, on different platforms. And everything takes T+2 days. So that's a relatively complicated and long process. So the vision here on the right is that if you move that to a distributed ledger, that you will have basically everything on the same platform, saving some time, saving some steps, and also saving some, especially back office work for the bank. So that's how SDX will start. Now they announced that they will to do that, so they need not just the securities tokenized on the distributed ledger, but they also need money on the distributed ledger. And they announced that they will issue their own stablecoin. And for us at the Swiss National Bank, the question came up, do we want that? Is that a good idea? Or should we provide directly the CBDC? And the background here is that if you have a financial market infrastructure that is systemically important, usually you want the cash settlement in central bank money, because central banks cannot go bankrupt. They can always fulfill their payment obligation in their own currency. So you have less risk in there. So you have no liquidity and you have no credit risk. So usually in a systemically important infrastructure, you want central bank money to be the means of settlement. Now, of course, SDX, when they will start small. They will not be systemically important for a while, but one day they could be. So for us, the question was, how would it look like if we would issue the CBDC on that platform directly instead of having SDX issue their own private stablecoin? And that exactly was our project, Helvetia. We have not committed to issue the CBDC. So in that sense, it was also only a pilot, but I say it was different from a research project because this is a platform that is going to go live this year. So all the details are there. I mean, everything from going right into the balance sheet of the central bank and into the core banking systems of the participating banks, all the legal issues. So everything, all the details had to be looked at. It's not just a research project where you simulate the participants. These are real participants with real infrastructure, and that was all looked at. So in that sense, I think it was a little bit different than a pure research project. But as I said, we have not committed to go live with our CBDC. From the results, we showed basically the same thing that other central banks did. too. It works. So if you have a good reason to use a DLT, we can provide a CBDC on the DLT very efficiently. But the current system, if there is no compelling reason to use a DLT, that the current system is just as fine. So that's just from the money side. But as this picture shows you, for the banks on the security side, there are some savings involved, potential savings involved if you move to a distributed ledger. Now, let me say something about retail CBDC, and that's the real, much more controversial issue among central banks. So what are the concerns? I already talked a little bit about one possible concern, and that is what happens to the commercial banks if central banks start to issue CBDC. That's the risk of disintermediation of the banking sector. Now, you find in the literature also a lot of counter arguments that the different ones, central banks could just replace the deposit funding with central bank money. People say also banks would become more careful because they don't want to lose the funding, and they would become less risky, which would be good. Or you could also say, depending on the design, how you distribute the CBDC, like banknotes, you could distribute them through the banking system and mitigate that risk. But the other question too is, some ask, like, why should a central bank issue CBDC? What is the value added here? Because you can make all your payments already now digitally with commercial bank money. And I think it's not so clear cut, but possible arguments in favor of a CBDC would be you have less risk with CBDC. It's the same argument that you use for wholesale CBDC on infrastructure. There are other issues, privacy protection. Just in the talk before, you heard about the use of payment data for credit rating. Now that is very efficient, but the same data can also be used for other things. It can be aggregated and combined with other data, and some people are concerned about that. So there's a question whether the state should provide a CBDC that gives you more privacy. Again, of course, other people are more worried about the government than about the commercial businesses in terms of privacy, but that's certainly a big issue. You could also argue that the central banks might have opportunities with CBDC that they have not yet, not now, namely with programmable money. And I'm looking at my time. I'm seeing we are getting close. So let me just skip forward here. In terms of CBDC designs, it's not decided yet how such a CBDC would look like. And I think that's the big area of research now among central banks. Some people say, well, the easiest thing would be you just give everyone a bank account. Like you now give banks a bank account, just give everyone a bank account, and that's it. We don't need DLT, we don't need anything else. We just need to open up the bank, central bank for private citizens. Of course, there are a lot of questions, KYC, AML, CFT, the central bank doesn't really want to do that. And of course, in that case, you would be a clear competitor to the commercial banks. There are other possibilities, so-called token-based CBDCs, hardware-based. The question then is, how do you do and who does all the legal compliance issues? And then finally, of course, DLT-based CBDCs. With DLTs, you have, of course, the question of how do you scale a DLT? There's this very well-known trilemma that was, I think, first put out by Vitalik Buterin, the founder of Ethereum, who said, you know, you have this problem that you cannot achieve all these three goals with a blockchain or with a distributed ledger at the same time: decentralization, scalability, security. So that's a big area of research right now. How do you scale a blockchain without sacrificing too much on either the security or the decentralization side? Now, most central banks experiment with business DLTs, which basically are closed networks. So you scale by sacrificing decentralization. You have a small network, you have a permission ledger, just a few participants. That's how you can scale. Then the public blockchains try it through protocol changes. If you're interested in that, on the Swiss National Bank's website, we have a nice video that was just recorded 3 weeks ago by Vitalik Buterin, talking about changes in the consensus mechanism and sharding. We also have a video by Christian Decker, who is one of the people working on the Lightning Network for Bitcoin. He talks about the third issue here, changes in the second layer, move things off the blockchain to scale. And then, of course, the last possibility would be you don't use the blockchain. And here I just point out a working paper I have done with David Chaum. We have a proposal for a central bank digital currency that is also based on cryptography, but that is working without a distributed ledger. So there are different possibilities. It's hard to say yet what design in the end will be chosen. So it's interesting to watch. And let me hand back to you with that, Glenn.
All right, Thomas, thank you very much for your very insightful presentation. Wow, we've come a long way. I used to work at the New York Stock Exchange, and I still remember paper stock certificates. So it looks like the future is here now. Thank you for sharing the information and what's going on in the Swiss National Bank, and both on the wholesale and retail side. We very much appreciated your presentation today. Thank you for being part of our program today.
Thank you very much.